also tell us a little bit about your experience in banking. Um, like what really led you to get into real estate from banking? Was it because you were in the loan department? Yeah.
I'll be honest, everything just kind of unfolded naturally. It's not like I had this goal to step into real estate or even banking. That was just me trying to find a job as a young 18-year-old who just graduated high school, was going to community college at the time. And, I got a job at the bank, started off in collections, and that pretty much boosted me into an entry level position in the mortgage department. Now, during that time, I came across a book given to me from my brother-in-law, Rich Dad Poor Dad, and that really kind of pushed me into wanting to step into the real estate world.
Okay.
Mm. So with that being said, if you have an individual that wants to get a mortgage to buy their first home, what are some things that they should do in preparation for that?
It's a great question. And that's probably what I'm most knowledgeable of, by the way, just the mortgage loan process. I've done that the longest. But to prepare you, first and foremost, I think everyone should have that goal. It's too often that we don't, take buying a home seriously, especially in our culture. But, a couple things that you can do to prepare yourself. One, get your credit right.
Mm.
And that's not as difficult as it may seem. A lot of us start off a little bit on the downside, but you get your credit right, you save some money,
Mm-hmm.
and you ready to go.
So what's a good credit score?
Most banks will not give you a loan with anything under a 620, but your mortgage interest rate is determined by your credit score. And so I would say, I typically tell friends, family, clients, you want to at least have a 660.
Mm-hmm.
And that's, my bare minimum. But to get someone of a decent or competitive rate, 680 and above, anything 720 is always going to get you your best. Again, it's not that you can drop your credit very quickly, but it's not that difficult of a process to boost it up if you actually lock it and do what you need to do.
All right. Now, I'm self-employed. So, and I purchased my first home in 2019.
Mm-hmm.
And I one thing that I noticed that I wasn't the only one that was because being self-employed, when you're looking to purchase a home, your criteria is a little different.
Right.
And a lot of people that work for themselves don't know that, or they're just either fearful because they know that most time the banks are going to have a microscope basically on everything because they want to make sure that the money is legit, where it's coming from. And I think a lot of people that are self-employed don't know that going in. So a lot of times they get a little fearful about, should I actually go and try to purchase a home? Because that was my fear. I was just like, I know how much money I'm gonna make, but then are they gonna really say, okay, where did this money come from? But when I went through the process, it actually wasn't as bad as I thought it was, because I had my 2 years of tax returns and the credit and things like that. So but a lot of people don't talk about that.
Right. So definitely two totally different paths. If you're working for someone, it is a lot easier. If you're a W-2 employee, let's just say that, because they'll strictly go off of your monthly salary, and that's typically set, whether you're hourly or on an annual. That's a set, simple task, simple thing to calculate for a loan officer. Now, when you're self-employed, it's typically a lot more difficult. And the reason why it's a lot more difficult is because as a self-employed person, we got to go through the tax situation.
More liabilities.
Right. And so, you may make, I know barbers who make 100,000 cash, but yet you look at their tax return and they made negative $15,000.
Right. They're trying to keep some of that money out of Uncle Sam's hands.
Exactly.
Yeah.
You have bartenders, you have all different types of contractors where everyone writes everything off. And the issue with trying to buy a house as a self-employed borrower is, yes, the bank's going to average your income over the last 2 years.
Exactly.
But they're actually only going to give you credit for the money that you pay taxes on.
Right.
So, example, you make 100,000, you write off 80 of it. You only really, in the bank's eyes, made 20,000. And so they're going to actually average your income over that last 2 years. So let's say you made that exact scenario twice. You made 20,000. You can't buy a house for 20,000.
Yeah.
And so you may feel like you've made a lot of money. You can even have, 200,000 in the bank, but if your monthly income doesn't support you being able to pay that mortgage, it's not going to happen. So it's a lot harder for someone who's self-employed to qualify for a mortgage, and that's just what it is.
Yeah, it is what it is. Yep. Yeah, you got to pay Uncle Sam a little bit in order to balance it out. But yeah, I hear that a lot. A lot of people just try to write everything off. But it's like once you get the house, go back to doing it the way you did it before, you know.